So at the time of recording this video, we're only a couple hours away from the NIO earnings report being released. And it seems like the market is expecting some good news since NIO is up right now. Only time will tell how this current share price will move this week and on the short term, but today I want to share with you the case for NIO going all the way to $150 a share in the coming years to come. Right now, everyone is focusing on the company and it has attracted a lot of people trying to make a quick buck, which sure might happen, but also might not happen. Let's instead zoom out and think about just why this company might help you triple your money in the long term. If you're new here, my name is Sam and welcome to the channel. If you find this video valuable, I would appreciate it a lot if you press that like button. It helps out my channel so much. Also subscribe if you want to see more NIO and other EV company updates in the future. We are a fast growing community and I would love to have you on the journey with me. So again, before we get into the $150 case for NIO, let's take a quick look at the 1 month stock chart. Just to give everyone some perspective, we were at around $27 a share just 1 month ago, and I'm happy for everyone that were holding NIO stock back then. Comment down below if you did. But regardless of this run up, I don't think we are anywhere close to being done. And let me explain why through an article written by analyst Luke Lango, who by the way has identified many up and coming growth stocks well before they were household names. Stocks such as Square, Shopify, Tesla, Chegg, and of course NIO, which have all made more than 10x in returns since then. Over the past year, as NIO stock has powered more than 2,000% higher, most investment analysts and investors have looked at the premium Chinese electric vehicle maker as a China story, and a China story alone. That is, analysts have expressed abundant optimism about NIO's ability to leverage its superior cars, unrivaled branding, and unique battery swapping model to dominate the premium niche of China's electric vehicle model over the next decade. But that optimism stopped there. To date, no one has really talked about NIO's ability to expand internationally and potentially replicate its China success at a global scale. Yet over the past few months, it has become increasingly obvious that NIO has the ability and technical powers to distribute its top-selling premium electric SUVs all across the world, including in the US and Europe. If NIO does successfully do that over the next decade, the implications for NIO stock are enormous. Luke's previous modeling, which assumed NIO dominating the premium electric vehicle market in China alone, produced a long-term price target for NIO stock of $60 a share. But after accounting for international expansion opportunities and assuming NIO does fairly well in non-China premium EV markets, his modeling now produces a long-term price target for NIO stock all the way up at $150. Let's go over the reasons for this. In short, NIO will dominate China's luxury EV market at scale because the company makes the best electric cars in China with the most exclusive and desirable branding in the market and sells those cars at a great price thanks to a unique business model. There's no denying the strong performance and aesthetics of electric SUVs. These are slick-looking, smartly designed luxury cars with tons of space, attractive interiors, omnipresent software integration, and a large sky roof that gives the cars a modern, open-air feel. On a specs basis, NIO's cars are only rivaled by Tesla in terms of range and pickup time. So when it comes to EVs, NIO and Tesla simply make the best cars without any close competition right now. And the difference between the two is really just preference. Meanwhile, as much as Tesla has done stateside, NIO has fostered excellent exclusive brand equity in China, primarily through the creation of swanky NIO clubhouses for car owners. In so doing, NIO has cemented itself as the cool brand in China's EV market, and this coolness is fostering such a robust demand for the company's EVs in China that if you want an EV in China and can afford it, you are probably going to buy a NIO car. And perhaps most importantly, NIO is selling its premium EVs for anywhere between $50,000 and $80,000. That's a great price for a high-performance luxury electric SUV like this. For comparison, Tesla's Model X is selling for over $100,000 in China. It doesn't take a rocket scientist to connect these dots. By selling the best premium electric SUVs in the market under a great brand and at great prices, NIO will drive to a leadership position in China's premium EV market over the next decade, which of course is great news for the stock. But why will NIO be able to sell their cars all around the globe? Many analysts and investors will look at NIO and ask why they will be able to sell these cars outside of China. But a better question here is why not? As we have already discussed, NIO's cars are rivaled by only Tesla's cars when it comes to EV performance, aesthetics and specs. Thus, if NIO does expand internationally and start selling its electric SUVs in Europe and America, those will be right at the top of the best EVs to buy list next to Tesla's cars. Naturally, from a performance basis alone, NIO's cars will drum up a lot of interest and demand internationally. Now consider that NIO's cars are cheaper than Tesla's cars and that the brand has comparably strong brand equity as Tesla. It's easier to see why NIO, if the company does choose to expand internationally at some point in the future, could sell a lot of cars outside of China over the next decade. I think that's exactly what will happen. NIO will grow by leaps and bounds over the next 5 years as it dominates the Chinese luxury electric vehicle market. The company will then leverage its bigger size to more easily expand internationally in the subsequent 5 years. Those international expansion efforts should be successful. Ultimately, by the end of the decade, NIO will be a globally dominant premium EV maker with a major presence not just in China, but in the US and throughout Europe too. The implications of the international expansion for NIO stock are just enormous. The last $60 long-term price target model assumed that NIO commanded around 8% of the market shares of the Chinese EV market by 2030, leading to around 1 million deliveries, 40 billion in revenues and about $3.75 in earnings per share. It did not factor in international expansion. But as it is becoming increasingly obvious that NIO will expand internationally and experience tremendous success in doing so, Luke Lango is upgrading his model to factor international expansion into the equation as well. Broadly, he now believes that NIO can control 8% of the Chinese EV market by 2030 and around 4% of the global EV market excluding China, leading to over 1.5 million deliveries and over $60 billion in revenues, and about $7.5 in earnings per share. Based on a 20x forward price to earnings multiple, that implies a long-term price target for NIO stock of $150, which basically means that the key to NIO stock unlocking multi-bagger gains from here lies in the company's ability to expand into Europe and the US. Some may label the price target hike in NIO stock from $60 to $150 as a reckless optimism and price chasing, but it is not. It's simply assuming that the best-in-breed EV maker with distinct and enduring competitive advantages successfully sells its ultra-popular EVs all across the globe and not just in China. That's a very reasonable assumption, and under that very reasonable assumption, NIO stock could be driving to $150 over the next decade. I will link the article in the description down below if you want to take a look at it yourself. But I think that really summarizes my view on NIO as well, having established such a strong presence in China and technologically only really being rivaled by Tesla among the electric vehicle companies, of course. I see no reason for why it shouldn't be able to take market shares in the global markets as well. I'm very excited to read the earnings report and I'm expecting some great results, but we have to remind ourselves that this is a long-term company and that we are in it because we believe it has a very good chance of being a leader in the electric vehicle industry for years to come. For this reason, unless we see some very unexpected results, I will look at any panic sell-off as just another opportunity to be greedy while others are fearful. And with that, I want to conclude today's video, so make sure to give it a like to help us reach out to more people about the long-term case of NIO and not just the opportunity to make a quick buck. Pressing that thumbs up button helps out more than you can imagine. Also, subscribe if you want to see more similar content, and I will make sure to provide more updates for you. We are so close to 3,000 subscribers and one step closer to the big goal of reaching 10,000 investors by the end of the year. So if you watched all the way to this point, subscribe and join us on this journey. Thanks for watching, stay tuned for my earnings report video, and enjoy the rest of your day.